What's going on? Wanted to hop on today and make a video talking about the trade that I took this morning. I took a short on NQ, resulting in about $1,000 winner. So I just wanted to get on the charts today and backtrack everything for you and walk you guys through start to finish how I come to the charts every single day, how I make my plan, all the way down to how I do my entries and exits. So everything from determining my bias, my draw on liquidity, marking out session areas of liquidity, and all the way down to my entries and exits. So without further ado, let's get into it. So I want to start by recognizing that last week during Friday, we got to our area of sell side liquidity where it was this previous daily low. So after we rejected this 4 hour fair value gap and this daily fair value gap, we eventually made it to the area of liquidity that we were looking for the market to reach towards. So coming into this morning, um, it's a no news Monday, so volatility is probably going to be fairly low. And we also just reached this area of sell side liquidity. I want to see the reaction at this area before I do anything. So I'm thinking of two options. Either we consolidate in this area and build structure to possibly move back up towards this imbalance, or we start to displace below this sell side liquidity and create more areas of bearish fair value gaps and bearish higher time frame PD arrays to continue to move down. So I had now that I have my I can see that we can now that I have my area where I'm looking for a reaction, we can see that overnight we have started to displace through that area of sell side liquidity. So I'm leaning a little more bearish. So now that I know that I'm bearish, I want to start to look for areas where we could reject in the New York session. So I'm going to mark out my midnight open because if we are bearish on the day, I would like to see price manipulate above midnight open and then displace lower back into the range towards the downside, creating higher time frame bearish fair value gaps. So we can see at midnight open, we manipulated above midnight open and then displaced lower back into the range. And when we displaced lower back into the range, we created a 1 hour fair value gap right here. If we mark out our 1 hour fair value gap, now there's two fair value gaps, but my trick that I use that I was taught was if there's two fair value gaps and they're stacked right on top of each other, I typically like to use the fair value gap that was created first because just from my journaling, my data, my back testing, I've noticed that the first one is going to get tapped and it also offers a better risk reward. So I am only going to mark out this 1 hour fair value gap right here. So now that we have our 1 hour fair value gap, this is our area of where I'm expecting price to project in the New York session. So now that I have my higher time frame area where I'm expecting price to reject, I now want to mark out my areas of liquidity. My areas of liquidity are always going to be a few things. I personally like session highs and lows. So previous day high, previous day low, New York session high, New York session low, London, Asia, those highs and lows. So now what I do is I'm going to mark out my areas of liquidity. So we're going to start with the London high, mark out the London buy side liquidity, then mark out the London sell side liquidity. And then we have our New York buy side liquidity and our New York sell side liquidity. So now that I have my areas of liquidity, let's backtrack. Now that I have my bias, my higher time frame PD arrays where I'm expecting price to reject, and I also have my areas of liquidity, I'm now waiting for price to reach into a to buy side liquidity and watch the reaction there. Because if we just take a trade in the middle of this range, that would just be for pattern's sake. And I would probably say that's the biggest thing with my trading recently that has helped me out with my profitability and also just my risk to reward overall and getting chopped up. I'm avoiding trades. Um, I'm being more precise. I'm being more patient with my trades, and I'm being more precise for my entries just by waiting for certain areas of liquidity to reach. If it's not an important area of liquidity, I am not taking a trade. If it's not an important area of liquidity, I am not taking a trade. And that's just something that has helped me out tremendously and something that I will continue to do. So now that we have our areas of liquidity, I want to scale down to a 5-minute chart to see if we can start to get an entry pattern. I would like to see, so before market open, I noticed that we were accumulating inside of this 1 hour fair value gap. So now I'm either going to wait for two things. I'm either going to wait for a manipulation up to sweep this buy side liquidity, or I'm going to wait for an SMT to set in. And the SMT is what we got in this case to the downside. So we had the SMT right here where the NASDAQ was not able to breach above the high, and ES was. So we see on this 8:40 a.m. 5-minute candle right here, the NASDAQ was not able to sweep above this high from 750, and ES was. The S&P 500 was. So now that I have my SMT, this is the first part of me leaning towards price is going to be ready to go soon to the downside. So now that I see that, I'm waiting for a change in the state of delivery and an inversion of a fair value gap to show me that price is turning over and heading towards these areas of sell side liquidity. So this change in the state of delivery right here is what I'm waiting for. And right now it's 8:55. Mind you, this is a no news Monday, so I'm on a no news Monday. I'm either going to trade lower size, not trade at all, or wait for 9:30 open because that's when the volatility will more than likely step in place with the New York Stock Exchange open. So we see we have our displacement below this cluster of up close candles. So now this is going to be marked as our change in the state of delivery. So now what I would like to do is wait for either a pullback to this change in state of delivery or wait to see if a 5-minute fair value gap opens up. And another thing to note is we had the inversion of this 5-minute fair value gap right here. So with this 5-minute fair value gap being inverted, I'm now expecting these lows, these New York session lows. So we're waiting still for either a pullback to the change in the state of delivery or for a 5-minute fair value gap to open up. We have our 5-minute fair value gap open up right here before market open. So we can mark this out. I usually don't mark up my chart like this, but I'm just marking it up to show you guys, like this is the stuff that I'm looking for. So now that we have our 5-minute fair value gap, after the change in the state of delivery, after the 5-minute inversion fair value gap, after we tapped into a higher time frame PD array where there's an SMT, there's a crack in correlation showing that price may be ready to turn over and go towards these sell side liquidities, I'm now going to go down to a 1-minute chart and look for the same exact thing that I'm looking for on a 5-minute chart. It's the same exact thing. So I'm looking for a tap into the 5-minute fair value gap, a change in the state of delivery on a 1-minute, and a inversion of a fair value gap to get ran through, or a bullish fair value gap to get ran through if one is presented. So here, before market open, we're still not taking any trade because it hasn't tapped into the 5-minute fair value gap yet. Still not there. Okay, boom. We have our 5-minute fair value gap tap right here. So now what I would like to see is this cluster of up close candles. I would like to see a closure below this up close cluster of up close candles for a change in the state of delivery to show me that we're ready to go to these relatively equal lows right here. And this is still before market open. And then right before market open, we have our close below our change in state of delivery. So now what I'm looking for, you can either take, there's a couple ways that you can enter into this kind of trade. You can either enter at the close of this, below this change in state of delivery with a stop at the high and target here, and you're risking 25 and 3/4 points, or my personal way that I like to enter, just because it's more confirmation and better risk, is you can wait for a retracement to back to premium and also into a fair value gap. So we can see that we have our displacement down, our close below the change in the state of delivery, and then we also have a 1 minute fair value gap right here. So I'm going to wait for a tap of the 1 minute fair value gap, and then I'm going to take this short. So we just plays down a little more. I'm still not taking an entry. Like, if this goes without me, it goes without me, because it's just not in my entry pattern for me to chase right here. I know if I enter right here, my risk is way higher. Even with the tap back into the change in the state of delivery, I know that my risk is way higher. So I like to take one up here. I like to take an entry right here where I can place my stop loss above this fair value gap candle. So we're looking at a 14.25 point stop loss as opposed to a 20.25 point stop loss. If we were about 25 point stop loss, if we take an entry at the tap of the state of delivery. So I'm waiting for this 1 minute fair value gap to open up. It's still pre-market. Market still isn't open yet. So I'm expecting the 9:30 open to bring some volatility, tap into this fair value gap with a stop above the high, and then we move back lower. Still waiting, still not chasing, even though there's more displacement down. Still waiting, and then boom. We have our tap into the 1 minute fair value gap right here. I take my entry right here, stop loss above the fair value gap candle, and I'm only targeting the New York session low. I'll get into why I only targeted the New York session low in a little bit. So now that we have our tap in the 1 minute fair value gap, and then we have a move below this swing low right here, something that I personally like to do that helps me protect my risk is I move my stop loss to break even to protect myself against turtle soups. So we can see that we tap back in, we move down, and we ultimately get a move towards this area of sell side liquidity right here on the 15-minute chart, or just the New York session low. The reason why I only targeted the New York session low and not the London session low was because, one, there was an SMT here where NQ was sweeping this New York session low and the S&P 500 was not. So I didn't want to be calling a reversal on a no news Monday. It'd probably be choppy. And the second reason I wasn't expecting London to be taken was because there was no manipulation up into the London high before I moved back down to London low. So I was only trading the New York range that was presented at the moment. And that is why I only targeted the New York session low. So this is an A+ setup for me. This is what I look for every single day. This is how I chart every single day. Looking for the first and foremost, a draw on liquidity. Because if you have no draw on liquidity, then you're just going to be trading entry pattern for entry pattern's sake, and that's how you get yourself chopped up. Draw on liquidity, higher time frame, fair value gap. Where are we going to be expecting to reject from, and where do we expect price to reject and go to? I have my SMT. I have basically a model within a model. The same model that's happening on this 5 minute is the same model that's happening on the 1 minute, and it's the same model that's happening on the 1 hour. Price is fractal. I noticed that whenever I take my best trades, all of my time frames are aligning just like this. We have our buy side of the curve on the 1 minute and our sell side of the curve on the 1 minute. It's the same thing on the 5 minute. We have our buy side of the curve. We have our sell side of the curve. Same thing on the 15 minute. We have our buy side of the curve. We have our sell side of the curve. So, this is it. This is it. What I look for every single day. This model right here has taught me patience. It has reduced my losers and getting chopped up. So moving forward, if you guys have any questions about anything, about my strategy, about psychology, If you'd like me to make any videos on anything as far as my strategy and psychology or anything like that, as far as like what is buy side liquidity, what is a fair value gap, what is a daily bias, what is a drawn liquidity, just let me know. I'll be more than happy to make a video for you guys. But just wanted to hop on today and give a quick trade review of the short that we took this morning for about a $1,000 winner. Going to be requesting a payout today after the market closes. So don't know if I'll be trading the rest of the week, but I will talk to you guys next time.